For 10 years, India's had a company so big, it cracked the Fortune Global 500 by revenue, bigger than most of the banks, IT giants and car makers you can name off the top of your head. This week, India's market regulator looked at that company and said roughly 99% of that money might not actually exist. So where did 15 lakh crore rupees go? And how did nobody catch it for 5 years straight? I'm Nelson John, and this is the Nelson John 360 podcast, where I take one story and dive deep. Today, the Rajesh Exports story. We'll cover how a small Bangalore jewellery shop became a global gold titan. The one weird thing about it, is its books that never added up, the single email that cracked it open, and what SEBI is actually alleging, and the part that probably affects you, whose money is sitting in it. Stick around, because the last piece connects this gold company to a smartphone factory that was never built. Start in the 1980s. Two brothers, Rajesh and Prashant Mehta, run a small gold jewellery operation in Bangalore. 10 employees, nothing fancy. Fast forward to 2015, that same company drops $400 million to buy Valcambi, a Swiss firm that's basically royalty in the gold world. We're talking one of the largest precious metal refineries on the planet, processing more gold in a year than all of India consumes. Overnight, Rajesh Exports could say it touched something like a third of all the gold refined in the world. And in 2016, it debuted on the Fortune Global 500. Now, for a company most regular Indians have never heard of, that's a stunning rise. From a 10-person shop to a global heavyweight in under 3 decades. And here's the detail most people forget. This isn't the first time regulators look sideways at this company. Back in 2013, the Directorate of Revenue Intelligence alleged Rajesh Exports was diverting gold meant for export into the domestic market through its Cochin facility. So there is history here. Questions about this business are over a decade old. And on paper, it still looked unstoppable. But here's where you have to slow down, because the paper is exactly what is in question now. Quick question before we go deeper. If a company earns lakhs of crores in revenue, how much profit would you expect? Hundreds of crores? Thousands? Rajesh Exports was reporting revenues in the range of 15 lakh crores across 5 years and net profits of only a few hundred crore a year. We're talking profit margins of around 0.3 to 0.5%. That means for every 1,000 rupees that's supposedly moved through the business, maybe 3 to 5 rupees stuck. Now, and this is important for fairness, thin margins are normal in the bulk of gold refining trade. When you process other people's gold for a fee, you handle enormous value, but you only keep a silver. So for years, analysts shrugged. Huge top line, tiny bottom line. That's how gold works. Hold that thought, because that exact explanation, we just process the gold, we don't own it, is now at the center of everything. March 11th, 2024, an email lands in SEBI's inbox, not from a journalist, not from an angry ex-employee, from an ordinary shareholder. The complaints sound almost boring. Certain trade receivables, money the company says it owed, had been sitting unpaid on the books for years. That's a red flag, because real customers usually pay. Money owed forever sometimes means the sale wasn't quite what it looked like. SEBI started pulling the thread. On October 2024, an investigation officer was appointed. December 2024, they bring in DBO India as a forensic auditor. Through 2025, summons, document requests, more summons. Now, here's what I want you to notice. This didn't start with some dramatic raid. It started with one shareholder asking a simple, stubborn question. Why hasn't the money been paid? That's the whole point of having a market regulator. One question pulled hard enough can unravel a Fortune 500 story. To get the allegation, you need the company's structure. Follow the map. At the top, Rajesh Exports in India. Below it, a holding company in Singapore. Below that, a holding company in Switzerland called Global Gold Refineries. And below that sits Valcambi, the actual refinery doing the actual work. SEBI's finding is this: across FY21 to FY25, about 97 to 99% of the group's revenue was credited to these overseas subsidiaries. So SEBI did the obvious thing. It pulled Valcambi's own audit accounts in Switzerland and compared. The gap here is staggering. Valcambi's standalone revenue was in the range of a few hundred crore a year. But the layer above it was reporting trillions. SEBI's words in the order: the company may have misrepresented around 15 lakh 15,385 crore rupees. That's nearly 99.8% of its reported revenue. And when SEBI asked the recipients, the contracts, the reconciliations, the transaction records to prove that money was real, the regulator says it largely didn't get them. The company partly cited Swiss privacy laws. SEBI's response to that was in plain terms: Swiss secrecy does not override an Indian regulator's right to verify an Indian-listed company. Genuine question here for you. Drop in the comments. If a company can't show proof that its revenue is real, should the burden be on the regulator to disprove it or on the company to prove it? I read these and I'm curious where you land. Now, the part that sounds like a thriller. SEBI says Rajesh Exports recorded roughly 11,487 crore rupees of sales and almost the exact amount in purchases with a broker called Affluence Shares and Stocks. That's about 2/3 of the company's standalone business in India. So SEBI asks Affluence to confirm. According to the order, Affluence said Rajesh Exports was never our client. Those trades didn't happen with the company. The broker said it only ever dealt with the promoter, Rajesh Mehta, personally. SEBI also alleges company money moved into Mehta's personal account for derivatives trading. About 339 crore rupees out, only 232 crore rupees back. Without the board sign-offs, you'd legally expect. The company's explanation: Mehta was just a conduit. It wanted to trade digital gold through the MCX exchange, got tangled in litigation with the exchange. So the trades were routed through him on the company's behalf. SEBI says it wasn't shown the paperwork to back that up. Keep that tension in your head. Conduit versus diversion. That word is going to decide a lot. Two more pieces, and this is where the macro lens kicks in. One, the company reported around 1,035 crore rupees invested in African gold mining assets. SEBI says it couldn't get documents proving those assets even existed at that value. Two, and this is the tech angle, back in June 2022, a Rajesh Exports subsidiary signed an MOU with the then Telangana government for a 24,000 crore rupee factory to make 6th generation AMOLED displays. The screens in your phone. It was hailed as a game changer. Thousands of jobs, India breaking into cutting-edge display manufacturing, the kind of the thing, only a few countries can achieve. 4 years later, there is no factory, no major construction. It quietly evaporated. And that's the bigger lesson here. A company's reputation, Fortune 500, world's biggest refiner, marquee tech investor, becomes its own kind of currency. Governments roll out the red carpet. The headline becomes the proof until someone asks for the actual receipts. So you might be wondering why a person, say, in Bangalore or Bhopal should care about a gold company's accounting. I'll give you 3 reasons. 1, it might be your money. LIC, yes, the insurer half the country trusts with its savings, held around 10.8% of this company. When a stock drops over 90% from its high and slams into the lower circuit, that's not abstract. That touches real portfolios, real policy holders. 2, it's about trust in the whole system. Every time you are told to invest in equities, it's how you build wealth. That advice only works if the numbers on company filings are real. Cases like this are the stress test for whether that trust is earned. 3, the geopolitics of a number. For years, this single company's giant revenue figures was part of the story India told about its export scale and global reach. Now, to be fair and accurate, no government agency has said India's official export data was distorted by this. But it shows how one company's claims can quietly shape a national narrative. until a regulator pulls the thread. Now, Rajesh Exports denies wrongdoing. Its core argument here is there is no overstatement, just a misunderstanding between standalone and consolidated accounts, and a communication gap with SEBI. Chairman Rajesh Mehta says the disclosures were accurate and compliant. And crucially, this is an interim order, prima facie, not a verdict. SEBI itself said the company gets a full chance to respond. So what happens next? SEBI has barred the company and Mehta from the securities market for now, ordered a fresh forensic audit, and the case moves to responses, verifications, and if violations are established, this will play out over months, maybe years. Now, here's the thing I keep coming back to. The fanciest accolades in the world, Fortune 500, world's biggest marquee investor, none of them are a proof. Proof is boring. Proof is in the paperwork. And the one person who asked for the boring paperwork was a single shareholder with a stubborn question. So before you believe anything big, shiny numbers, ask whose receipts back it up. If this 360-degree analysis helped you actually understand the story instead of just the headlines, just subscribe. That's the whole mission of this channel. I'm Nelson John, and I'll see you in the next one.